Uno Minda Limited's Q1FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bohra, Group CFO. Thank you, and over to you, sir.
Thank you, Carol. Good evening, everyone, and a warm welcome to all the participants. On the earnings call today, I am joined by my colleague Ankur Modi, Head of Corporate Finance and Communications. We have uploaded our financial results and investor presentation for Q1FY24 on the stock exchanges and our company's website. We hope everybody had an opportunity to go through the same. I would like to begin by giving some insights on the economy, followed by the current scenario in the auto industry and our financial and operational performance for Q1FY24. And post that, we will open the floor for Q&A. Amidst the heightened global uncertainty, the Indian economy has proved to be more resilient than many large economies of the world. A conducive domestic policy environment, along with healthy performance of its key macroeconomic indicators, have sustained the growth momentum of the economy. As captured by the Central Bank's Economic Activity Index, the GDP growth for Q1FY24 is forecasted at 7.9%. Urban consumption remains robust while rural demand is improving, though unevenly. The improvement in demand has translated into an improvement in capacity utilization in many sectors, which will lend further impetus to private capex this year. Above average monsoon so far in large part of the country and sustained buoyancy in services are expected to support consumption, while the government's thrust, moderation in commodity prices, and robust credit growth are expected to nurture investment activity. The interest rate pause by RBI is expected to stabilize and in future may bring down cost of capital for India Inc., thus fueling fresh investments and giving private capex a further leg up. Discussing the auto sector, the Indian automotive industry has achieved a smooth transition to the BS6 Phase 2 norms. Overall, passenger vehicles, two-wheelers, three-wheelers, and CVs have performed well in Q1, although some sub-segments have shown slight momentary decline compared to Q1 of last year. The passenger vehicle segment has notched up its best ever first quarter of production in April to June, with production of 11.37 lakh vehicles, up 7% year-on-year, though there is a seasonal drop of 6% on Q-on-Q. The UV sub-segment continues to power the overall passenger vehicle segment, which comprises cars, UVs, and vans. UVs contributed 53% of the overall PV segment production, an improvement of 4% year-on-year. Even though the demand for PVs in the entry-level sub-segment has declined, there is significant migration of demand to UVs in the sub-4 meter segment. Holistically, PVs are growing and the segment is doing well. A combination of factors like ramped up production for popular models which have long order backlogs, improving supplies of semiconductors, new models in the market, positive customer and economic sentiment have helped maintaining growth momentum in Q1 FY24. At 48.98 lakh unit of production, the Indian two-wheeler industry has registered 1% growth year-on-year basis. However, retail sales have clocked 11% growth over the same period, signaling improved sentiments. Production volumes have also grown quarter-on-quarter by 12%. Even though the numbers being substantially lower than pre-COVID levels, the indications are positive. Based on the anticipated growth in the rural economy, the price increases due to various regulatory norms have impacted the two-wheeler industry in the past. We expect improvement in demand backed by a low base, lower inflation, and increased government spending ahead of election to drive recovery, leading to two-wheeler industry growth. The central government's FAME subsidy has been cut to 10K per kilowatt hour since June 23. The realignment in the FAME subsidy did lead to sudden consumer buying in May 23 and affected e-two-wheeler sales demand in June. Following the scaling down of the FAME 2 subsidy and the resultant hike prices of e-scooters and e-motorcycles from June 1, electric two-wheeler sales hit a 11-month low of 45,734 units in June. June e-two-wheeler retail sales are down 56% on May 23's record numbers, but they also point to gradual maturing of the market as consumers bought around 45,000 e-two-wheelers at higher prices. The production volumes of CV segment were marginally down by 1% year-on-year, while passenger carriers, both MNHCV and LCV, have seen strong demand. The slackened demand for goods transporting CVs in both subsegments have proved to be a drag on the overall segment. With India on the move, demand for passenger transporting three-wheelers is on the upswing. What has given a fillip to this segment is the accelerating demand for electric mobility, both for passenger and goods operations. Clearly, the USP of lowest cost per kilometer is a big draw, be it a single owner or a fleet operator. We remain optimistic of India's auto industry growth prospect in FY24, with high expectations of overall normal monsoon, which has now covered most part of the country. Coupled with lowering inflation, we expect the economy to continue to grow significantly, which in turn should help the auto sector. Commodity prices have stabilized, chip supplies are no longer an industry-wide issue, and despite the recent concerns about floods, we are likely to see uniform spread of monsoon, driving the agricultural sector and indirectly benefiting the automotive industry as a whole. Tracking the industry trends, Minda continues to invest in R&D for new product development and upgradation of existing product portfolio. Our primary focus remains on increasing our wallet share among existing customers while also adding new customers by expanding into new geographies and further exploring our current territories. With a diverse product portfolio and increased content per vehicle, along with cross-selling opportunities to our existing customer base, we maintain a positive outlook on revenue growth. Our dedication to customer satisfaction and market adaptability will continue to be driving force behind outperforming the auto component industry. Moving to financial and operational performance for the quarter, you can refer to slide number 5. The scheme of arrangement of two wholly owned subsidiaries, namely Harita Ferro Limited and Minda Storage Battery Power Limited, has been approved by NCLT. Now, entire seating business is housed in Minda Limited itself. This is expected to result in better synergy and efficiency for the seating business. The company has also taken management and operational control of the COSAI entities, KMA and KMM, with effect from 1st of April 23. Consequently, both the entities are also consolidated from the current quarter. A new four-wheel lighting plant in Gujarat has commissioned in March 23. It has ramped up well in the current quarter, reporting around 30 crores of revenue in the first quarter of operations itself. The order book continued to grow for four-wheeler and two-wheeler lighting, alloy wheel business, wireless chargers, infotainment, as well as for EV-specific products. Coming to the financial and operational performance, you can refer to slide numbers 7 and 8. At consolidated level, revenue from operation for the quarter increased by 21% year-on-year to 3,093 crores from 2,555 crores in Q1 of FY23, as we continue to gain market share and increase the kit value. The auto industry production volume has grown by 2% during the same period. The company continues its significant outperformance in the current quarter. We have witnessed growth amongst all our products, led by EV products, lighting, and PV alloy wheel business. The consolidated revenue grew by 7% even on quarter-on-quarter basis, as increase in two-wheeler volumes are offset by decline in four-wheeler volumes. EBITDA for the quarter was at 330 crores, improving by 24% from 266 crores on YOY basis. EBITDA margins for the quarter also has improved to 10.7% as against 10.4% in the corresponding quarter last year, primarily driven by benefits of operating leverage, part of which gets offset by cost escalations like employee salary increments, annual increases in admin expenses, services, etc. Finance costs have increased to 25 crore in comparison to corresponding quarter last year on account of incremental borrowing for land bank at Pune and working capital. Borrowing costs have also gone up following series of hikes by RBI, which is being passed on by banks in a staggered manner. The profit after tax, which is Minda share for the quarter, was at 173 crores as against 139 crores in Q1FY23, reporting a growth of 24%. Coming to the business segment by performance, starting with switching system, you may refer to slide number 12. The segment achieved revenues of 839 crores for Q1, contributing 27% of our consolidated revenues. While the increasing number of switches and technological advancements have been positively impacting the business, we have also been increasing our share of business on a quarter-on-quarter basis with lesser served Indian and Korean OEMs. During the quarter, we received more orders from the Korean customer. Our rigorous efforts, perseverance, along with superior product technology and quality has helped us to deepen our relationship with those customers. In two-wheeler switch business, better domestic OEM production has favorable effect, offsetting the lower exports due to slow pickup in newly launched model of the American OEM, along with the signs of slowdown in Europe. Our expansion of four-wheeler switch plants at Chennai and Farrukhnagar are going on as per plan and is expected to commence operations by Q2 and Q3 FY24 respectively. Moving to lighting business, it has achieved revenue of 710 crores for Q1, contributing to around 23% of our consolidated revenues. Four-wheeler lighting plant, as I said earlier, has been commissioned in the last quarter and is ramping up well. Last 3 quarters, we have done extremely well in terms of new orders won for passenger car exterior lightings. We have received incremental orders for the exterior lightings in the current quarter as well. Within interior lightings, tail lamps have seen remarkable shift in technology and aesthetics. In fact, some of the tail lamps orders received by the company is more remunerative than headlamps in terms of kit value. The company has also been working for other innovative lighting technologies like logo projectors and logo illumination. We have also secured orders for illuminated logos, which you would see in upcoming model of the leading OEMs. Besides exterior lightings, we have also built strong capabilities in interior lighting. We are already supplying ambient lighting and star moon lights to OEMs in Europe from our operations in Germany. We have now received orders for ambient lighting in India as well. The two-wheeler lighting business has been growing well. During the quarter, we have secured orders for headlamps and rear combination lamp from a leading new age EV OEM. Moving to our casting business, it has achieved revenues of 621 crore for Q1, contributing to 21% of our consolidated revenues. The growth in casting business revenues is led by alloy wheel two-wheeler business on account of incremental volumes from new customers added in the last quarter as well as better volumes from our anchor customer. As was advised in the last earnings call, the company is also consolidating KMA from current quarter pursuant to business strategy agreement. The company has also started working on turnaround plan for KMA by investing in refurbishments of assets, evaluating exiting non-profitable export business, and centralizing procurement along with MKA. The ongoing expansion of two-wheeler alloy wheel plant at Supa is on track and is expected to commence operations in phased manner by Q3 FY24. Moving to acoustics, slide number 13 you may refer to. Our acoustic business had achieved revenues of 208 crores for Q1, contributing 7% of our group revenues. Both India business and European subsidiary Charlton Horn reported stable growth. We have added Korean customer for acoustic business as well for trumpet and disc horns. Moving to the seating business, we have achieved revenues of 273 crores for Q1, contributing 9% of the consolidated revenues. We are seeing early trend of customer focus on comfort and safety in commercial vehicle as well in India. The Indian government has approved draft notification to mandate the installation of air conditioning systems in the cabins of trucks, signaling focus on comfort and safety. This is a very positive development for us, providing opportunity to offer better design and technology products with a higher kit value in that segment. During the quarter, we have also received an order for pneumatic and mechanical suspended seats. In the last earnings call, we had informed about the order win from new customer, which is an established OEM. We have started supplies to them in Q2 FY24 recently. Seating business is poised for healthy growth going forward with SOP of at least 3 new two-wheeler EV OEMs in next 6 months. These are in line with our customer diversification strategy and advice at the time of setting business acquisition. Moving to the other product businesses, which have achieved revenues of 440 odd crores for Q1, contributing 14% of the overall top line. The growth in other product business is mainly on account of EV products, controllers and sensors. Minda was the first company in the country to have localized wireless chargers, and today you will find the same in models of leading OEMs. During the quarter, we have received incremental large order for wireless chargers for BEV and ICE program of an Indian OEM. Moving to the electric vehicles, as you will see, the revenues from EV two-wheeler OEMs has increased to 148 crore in Q1 as against 78 crore in last quarter. EV two-wheeler OEM revenues as percentage of our two-wheeler domestic revenue stands around 12% for Q1 as against EV penetration for two-wheelers at around 4.5%. The revenues from EV two-wheeler OEM has been steadily increasing with SOP of various new businesses. Our new EV systems plant at Faruknagar for joint venture which Vivo has started with 2 assembly lines. It will gradually increase number of lines with SOP of more orders in second half of FY24. New orders from EV OEMs continue to swell with order wins for EV specific components as well as existing products. During the quarter, we have received new orders having annual peak revenue of around 600 crores. The total annual peak revenues from these orders stands at 2,100 crore plus. I would like to highlight that we have been communicating only annual peak revenue potential from these orders. The lifetime value of these orders are significantly higher. As you can see on the slide, these orders are from diverse vehicle categories. Moving to the share of profit loss from JV and associates, which for the current quarter is at 30 crores as against 22 crores in Q1. While all our JV associates contributed positively, major contribution came from Denso 10, Roki, TG Minda. Denso 10 has received large orders for infotainment from a four-wheeler Japanese OEM during the quarter. Expansion in TG Minda for airbags and TRML for systems like seatbelt, etc. is on track and is expected to complete by end of FY25 and H2 of FY26 respectively. Moving to the aftermarket and international revenue. In terms of our revenue pie for the quarter ended June 30th, OEM business accounted for 92% and aftermarket at around 8%. Our aftermarket division revenues were up at 249 crores as against 223 crores in the corresponding quarter last year. While aftermarket business has been growing in absolute terms, OEM business has been growing at a faster pace, hence the effective share in the revenue pie of aftermarket is low in the current quarter. Our debt levels as of June 30th were at 1,090 crores of net debt compared to 1,078 crores, almost flat versus March 31. Moving to the strategic business update, the first being completion of mergers of Harita Ferrer and the merger of the battery business from MSBPL with Minda. As informed a little while back, we are pleased to inform you that the scheme of arrangement has been approved by NCLT. Moving to the COSI entities acquisition. Last quarter, as you know, the board of the company had approved acquisition of 81.69% stake in COSI Minda Aluminum and 49.9% in COSI Minda Mold from JV partner COSI Japan. The acquisition is planned through composite scheme of merger with Minda through swap of shares. The scheme was filed with stock exchanges for taking ownership. While the merger will be subject to various statutory authorities, Minda has started managing the business and operation of these two entities with effect from 1st of April. Consequently, the financials of these two entities are getting consolidated. We would like to inform you that the order for merger of Minda iConnect merger with Minda is reserved by NCLT for pronouncement. Moving to ESG, incorporating social and environmental accountability into everything we undertake is a fundamental aspect of our corporate identity. With economic responsible actions, taking conscientious measures to and transition towards it. 2 years, we have installed roof open access projects at 16. Also set ourselves an ambitious target of meeting for at least ESG rating by Sustainalytics has improved from medium to low risk. This is our first formal integrated reporting in FY22. The way forward, moving to the rest of next year, the outlook remains very promising with supporting industry volume guidance, commissioning and ramp up of multiple expansions, namely EV plants, two-wheeler alloy wheel expansion, four-wheeler switch plant at Farrukhnagar and Chennai, etc., with our existing and diversified portfolio and new product technologies. We are confident of sustained outperformance. With this, I would like to now open up the floor for questions.
So can we open the call for a Q&A session now?
Yes, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Jhawar from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. Congrats on good set of numbers and good order wins. My first question is that if you look at our presentation, there has been an increase in kit value for four-wheelers, electric vehicles, specifically by 50,000 in 2023. So if you can highlight or remind us that what are the product addition in EV which resulted into this increase by almost 50k in this year?
Your question is kit value in the last presentation?
Yeah, no. So kit value increased for EV four-wheelers by 50k this year versus last year. So what are the incremental products for four-wheeler EV we have added this year?
Where are you referring to, Aditya? I'm maybe missing something.
No problem. I'll take it offline. I'll move on. Yeah. Second question is on the two-wheeler, our current market share by by end of the year.
In terms of market, still I would say premature. Market share based on the
Yeah. So firstly, on this EV specific component orders, we had order book of around 1350 crores, which is 400 crore increase versus the March quarter. So in this order book, what would be largest product for us? I believe it's chargers only, but how much would be that?
It's a mix of product, Ashutosh. There are chargers, there are BMS, there are controllers. It's all across all the products, including the EV motors.
Okay, but largest only charger only, right?
I have not seen specifically from that, but I would tend to agree so, because there is a large this charger of wood charger business also for the LCV segment as well.
Okay, so both two-wheelers. And so this 1350 crore kind of order that we had the peak revenue potential, this will be achieved likely in which year?
No. This will be based on the customer indication. As of now, it is for 25-26.
26, okay. And so we have been mentioning about this Korean OEM order wins in the Swiss segment for last few quarters. What would be, like, say, I mean, based on this order, what would be our share going 1 or 2 year down the line in the Korean OEMs?
Look, obviously we are expecting, Ashutosh, you'll appreciate a very aggressive way to gain consistent new business. So when we started, we started with one switch, and now as we speak, we have already got 6 to 7 switches, and in the vehicle you have, as I reflect, 19 to 21 switches based on the model to model. So we are still working on. There is huge scope for growth, and some of the repeat orders we have got, they are what we call in the business which we have already sort of supplying, but it's a new model.
Okay, so these are multiple models for which we got orders now.
Yes, yes.
And last, on this alloy wheel side, KMA would have contributed how much to revenue this quarter?
Sorry, come again?
This Minda alloy wheels, the entity that you acquired, would have contributed how much to alloy wheel sales in this quarter?
Minda during this quarter.
Yeah.
Okay, so that is roughly around 50 crores.
Sorry?
Around 50 crores.
50 crores. And then two-wheeler would have contributed how much? Two-wheeler and four-wheeler separately?
Two-wheeler and four-wheeler alloy wheel.
Yeah, separately, yeah.
Anyway, so two-wheeler is, I think, something around 140 crores.
Okay.
Could you have four-wheeler number?
Yeah, four-wheeler is somewhere around 300 crores.
300, okay. So 350 all put together, both put together.
Correct.
Okay. That's all from my side. Thank you.
Thank you. Before we take the next question, I'd like to remind participants to please limit your question to 2 per participants only. You may rejoin the question queue if you have a follow-up. The next question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Yes, sir. Thanks for the opportunity and congrats on a good set of numbers. Sir, my first question is again on this EV side. Like you have said, by FY26, we should largely be close to these numbers. How to think about the ramp-up current year and next year? And entirely everything will come in Frevo, or there will be some part which will come in the existing company also?
No, so the way this is, Siddharth, the JV with Frevo has only two-wheeler EV components, and that too the products which the JV specifies. Like, for example, even for two-wheeler, there is this sound box, or what we call artificial awaaz, what we call. That is not part of the JV, that is part of a controller business. So a lot of the EV business which is outside of two-wheeler, like if I talk of the LCV or three-wheeler and all, they're not part of controller business, they're not part of the JV. So they will come in the parent, Minda division.
Okay. Okay. And would it be possible to talk about the customer mix here? Because after some of the subsidy, as you will be aware, there is a lot of polarization in the demand. So how will be your customer mix for these orders and the risk to the ramp up in case the volumes are lower?
So we have across the board customers that, and you will expect that even some of the customers who are facing that headwind in the subsidy matter, they are also our customers, and also some of the new OEMs, and also the old established players who are also in the IT. So we have been working across. So if you ask me who is how much, that will be difficult to answer. But yes, it is spread across many customers. There is no concentration of a customer with a major business.
Okay. Okay. So lastly, I mean, if you see the interest costs, they have gone up also quarter on quarter, while you had said that the debt levels are largely similar. So why is that? And second is the profit in associates also is much higher. So if you can just share the key entities where the profits have gone up.
Yeah, so finance cost is higher, Siddharth, by roughly 4 crores during the quarter versus the earlier quarter. So as you know that there are 2-3 things. One is that the 80 crore of additional borrowing which we have done for this land at Pune, part is yet to be paid. Plus there has been capitalization of couple of projects which obviously earlier interest cost was capitalized. That is going to pay. They're small things, but definitely it adds up. So that is the broad. So it's not very big, but yes, on a quarter-to-quarter basis, there's a 4 crore increase. And your second question was on the JV. So as I said, the couple of JVs, which is the TG and Denso, they have done pretty well in the quarter, and that's why you're seeing little bit better profit. But there is no one-time profit in this, and we do expect this profitability to sustain.
Okay. Okay. So possible to share the number of TG or TR Minda for the quarter?
Sorry, come again?
What will be the profit for TG or TR Minda for the current quarter?
Can you take an offline if you don't mind, Siddharth?
Okay, sure, sir. Sure. I'll come back.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening.
Mr. Ashish Jain, you may please go ahead with your question, sir. As there is no response from the current participant, we proceed to the next question from the line of Raghunandan NL from Nuvama Institutional Equities. Please go ahead.
Thank you, sir. Congratulations on good numbers. Sir, among the EV products, where do you see the potential of achieving market leadership or be among the top 3 players?
When you say where do you see potential, you are talking of a specific component, is it?
Yes, sir.
So we definitely have what we call a sizable business in off-board, onboard charger. I'm talking because they are high-value products also. Off-board, onboard chargers, we have very significant business. Then we have got a sizable business visibility in BMS and also the motors. They are all what we call high value, followed by motor controllers and some of the other components.
Got it, sir. And these should be the candidate where you should go to top 3.
But I'm adding, as of now, it will be difficult to say that there is one major or other, because as you know, that market is still evolving, and we also have the customers spread across various businesses. So I think if you ask me what is my strength will be all. But in terms of business, I think it's still sort of continuous, and we do expect significant business addition also in the coming quarters. So maybe we'll be in better position to answer that after a year when we have even better order book.
Got it, sir. But generally, you would have a benchmark, right? That when you get into a category or a segment, you would want to have a minimum amount of market share over the medium to long term.
So that's what I said, Raghu, that yes, our aspiration, has always been to get 25-30% kind of market share. But the products which currently we are, even the OEMs are in the stage of evolving, right? Some of the OEMs are doing in-house. Some of the OEMs are outsourcing to people like us. So market also is not like in a stage where you would expect to be, right? And I think we spoke this in past also on the call that the ICE market is more than a century-old market, whereas this market is still evolving. So maybe we need to give some time to this industry to sort of stable and sort of decide what road it adopts going forward. So with that caveat, I would say that there are a lot of customers who are still working to see that things get outsourced to players like us, because we bring a lot of know-how, a lot of skill set when you talk of specific components, because we will have visibility across the board. We will invest in R&D for every product, whereas there will be limitation in terms of customer investing in that. And number 2, and you will appreciate that after our launch of this two-wheeler in the Auto Expo, which we have fully developed in-house, we are actually working with a couple of OEMs in terms of designing a full two-wheeler EV vehicle for them. So we do expect significant business opportunities going forward, considering the penetration and the depth of relationship we have with these customers.
Very helpful, sir. And as the ramp up happens on the EV revenues and having 12% exposure of domestic two-wheeler EV from EV is a very good achievement compared to industry penetration. So as this ramp up happens, would you expect PLI scheme incentive boost to come through this year? How is any progress in that regard?
So, Raghu, that government has still been giving those requirements. They have issued the formats only in this quarter, and accordingly then you have to get the certification from ICAT or ARI, whatever. So there is a significant delay from that perspective, but once it sort of settled down, we definitely do expect getting into those benefits. But as of now, we have not accounted for any such potential benefit into our financials. So whenever it comes, obviously it will be an additional advantage.
Got it, sir. And on the margin side, ramp up of new facilities would have some fixed cost impact in near term. But how do you see the catalyst in coming quarters, to take the margins to 12%?
I wish, Raghu, 20% margin, definitely that will be a wish in the medium term, but I want to keep my foot on the ground, because we know the market is very, very competitive. We also appreciate that our margins have been in the top quartile, if not top decile in the industry. And the kind of investments we have been doing in R&D, I really can't comment about others, but we have been making significant investments in R&D, and all those costs are fully sort of charged up to revenue. We are not capitalizing and then amortizing or all that. So that costs are also baked into this current margins. So having said that, we do, I think as we spoke in the last quarter also, we do expect to sort of in the short term maintain our margin profile on an annual basis what we delivered last year. Quarter to quarter, you know that there can be some ups and downs, but on an annual basis, we do expect on to hold on, and gradually as we move to future, and as you rightly mentioned, when the new facilities stabilize, that benefit definitely will accrue to the margins, but how much, difficult to comment at this point in time.
Thank you so much, sir. Very helpful. Just a last question. Any update on the airbag business, expectation on implementation date, any improvement in order traction?
No, so as we spoke this on the last call also, there has been a lot of traction with the customers. We have been securing a lot of good businesses. And I think we also shared last call that about our personal view, it may not be a vetted view, that the 1st October deadline what we have, definitely that might need to be sort of shifted, and there might be some sort of a midway being recommended, but what that will be difficult to comment. But if you ask me whether 6 airbags will effectively be implemented from 1st of October, might not.
Got it, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mukesh Mandesha from Anand Rathi. Please go ahead.
Yeah, hi, sir. Thank you so much for the opportunity, and congratulations on good numbers and increase in EV orders. Sir, on the EV specific component orders book now has increased to 13.5 billion. So we have earlier targeted of 15 to 20 billion revenue targeting next 5 to 6 years. So where it is ramping up, should the upper band of the range be achievable?
So that's what we are working for, Mumuksh. We have not given 2,000, but I remember we have set 1,500 crores of revenue in by FY26 when we did the JV with Frigo. But yes, you are right. The way where we are today, we definitely do expect to sort of do much better than that.
Right, sir. Sir, can you talk about the charger revenues currently and what would be over next few years?
We don't normally give product-wise revenue mooks, but I think normally you guys do ask what is our sensor and controller overall revenue. So the last quarter, if it helps, it is roughly around 200 crores.
And for full year, what would be the guidance, sir, for sensor controller?
So with this space, if you analyze it, it's 800 crores, but it ideally should be much more than that.
Right. And sir, on the casting alloy wheel segment, what could be the revenue expected for the full year, sir, for both two-wheel and PV?
So again, difficult to give a revenue number, Mooks, because for us, commodity is fully passed through to our customers, somewhere it's even on a monthly basis. But if you ask me on a volume basis, our capacities are fully booked, and we do expect the plant to sort of operate at 100% of the capacity for the full year.
Got it, sir. Thank you so much for the opportunity.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Yeah, thank you for giving me the opportunity. First, on this quarter performance, for in the other segment, we have seen 15% increase in revenues on a sequential basis. So can you give us some color on which segments have done well during the quarter?
So as I said, Rishi, if you would have noticed, controller is one of the segments which is part of others.
Right.
So definitely that has done pretty well. So that has helped a lot in terms of the outperformance during the quarter.
So that's the only one segment?
Yeah, that is almost quarter on quarter almost double the revenue what it was in Q4 and what it is in Q1.
And what has driven that? Like, is this new order ramp up?
Sorry?
What has driven the doubling of revenues, basically?
So this part primarily on the EV components, and if you see that slide also we presented, right? So,
Right.
So the controller and the EV components put together, the revenue are almost double, which is all part of others. So, okay. So I don't remember the slide number. Could you remember slide number?
Yeah, I'll take a look at.
That's EV. Yeah, if you refer to slide number 17, you will get an indication because that has grown from 78 to 136 crores, and that is primarily large part is in others.
Controllers. Understood. Okay, understood. And on margin side, you are guiding for kind of maintaining the last year margins for full year, right?
Yeah.
As of now.
Yes, sir.
And for you to, let's say, reach 12% in the medium term, what will drive those margin expansion? Is just operating, basically capacity utilization levels improving for us, is it?
No, there are 2-3 things, as you rightly mentioned, Rishi. While, as I said, 12% is the number, we are also working internally from management perspective, but not for this year. That's why I'm not committing that number. But in the medium term, definitely that is the aspiration. And the lever for that will be few levers. As of now, we have got multiple projects running, so that once they commission, in immediate short term, right, what happened first year is like it's a drag, right? As you spoke it well back, we have 9-10 projects currently ongoing, and when they get into production, you don't get profit in the first year. So there you have all the fixed costs starting from day -1 actually, because you have to build teams even before the plant gets commissioned. So all those costs definitely it drags, but once you see them stabilizing, they definitely helps. Number 2, with the kind of growth we are able to sort of deliver almost 20% plus kind of a growth. We do expect some bit of operating leverage also to support, as you would have seen in the current quarter also. And also some of the costs which are in the nature of depreciation and interest costs, we don't expect them to increase in the proportion of revenue, as you rightly mentioned, maybe little bit better capacity utilization, etc. So all these factors we do expect to help going forward. Yes, some of them are not part of that 12%, like depreciation and all, but yes, they might be coming to the bottom line.
Understood. And just lastly on PLI scheme, where are we on that, and when do we expect that to come through this year?
Yeah, definitely, we do expect them to come through this year, Rishi. So we will be filing our application within this quarter because the forms have only been rolled out by the government in the last quarter. So we are pretty optimistic that in this year, government should then fast track once the application etc. are submitted. So by end of the year, we should have complete clarity on how much will be the additional sort of benefit flowing it through the income statement, and that can also be one of the trigger for that 12%, because that is not currently factored in.
And just lastly on that, do you expect to retain the all benefit of PLI, or you expect OEMs also to take some part of it?
Let us keep something for the time. Obviously, if you ask me, I would like to keep everything, but I think we are in business, so we have to sort of find a win-win.
Understood. Thank you, sir. All the best.
Thank you, sir.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Sir, good evening. So my first question is on the switches business. For the last 3-4 quarters, switches business has been flattish in that 800-830 band. So what is the outlook here from a growth point of view?
So switch business, that first of all, we are one of the largest player in the country. We hold almost like 60% kind of a market share in two-wheeler and almost 50% kind of a market share in four-wheeler segment. And that is why, and also the kit value has increased significantly in past few years. If you see last 4 quarters, you are right that the The revenue is roughly around 800 to 850 crores. But what is to be noted is if you see quarter on quarter last Q1 versus this Q1, there is a significant jump of more than 15%. That's number one. Number two, this is despite some of the headwinds our American and the European customers are facing. So that has also been factored in. So once you see some sort of improvement in those businesses, that also will show an uptick. Plus, we are also working on some new customers in terms of exports for two-wheeler switches. So all in all, we do expect that also to grow in the coming quarters.
Right. But sir, what would be the growth for the India business within this? Can you share that number?
So India business, as I said, Ashish, it is like obviously you try working to hold on to fort. So the share of business gains you will appreciate is not easy once you reach more than 50% kind of a market share in the country where there are multiple players. It is not like Minda, you have all the global majors also in the country like that. So everybody, right? From that perspective, the market share gains, we are still pushing. There are a package of opportunities like the Korean customers in four-wheelers, and there is one customer in the domestic market as well, which we are working. So you will see the growth, but because the other businesses are doing pretty well, that is getting a little bit shadowed. So it is almost like 27-28% of our total revenues. So the base also is very high. But we are pretty optimistic considering the increase in kit value, exports, and also patches of customers where there is improvement of higher penetration.
Right. So secondly, just a housekeeping question. You shared this number, the breakup of the castings revenue for this quarter. I think I have got something wrong. Can you just repeat that? Two-wheeler, four-wheeler within casting?
Yeah. Actually, for two-wheeler alloy, it was 140 crores. For MK and KMA, both included, somewhere around 350 crores.
Okay. Got it. Great. Thank you so much, and best of luck.
Thank you. A reminder to the participants, if you have a question, please press star then one on your touchtone telephone. The next question is from the line of Karan Gupta from Varanium Capital. Please go ahead.
Yeah. Hello. Am I audible?
Yes, sir, you are. You may please go ahead.
So thanks for the opportunity. My first question related to the wallet share of the various products we are catering to the various brands. So on the brand wise, if you can comfortable, so you can share the wallet share of our products.
Sorry, come again?
Wallet share of our products.
For
the brands.
What do you mean by brands?
So the companies we are serving. So what is the wallet share of our products in the company's wallet?
I think you have to take this question offline.
Okay. So content per vehicle, if you can share.
That is there in our presentation. If you refer to our last presentation, it is there for different categories of vehicles, both for passenger car and also for the two-wheelers. I think it's there in the presentation also if you refer to slide number 27.
Okay, for the last year.
Yeah. We do annually, we don't do quarterly. So up to March 23, it is there on slide 27.
Okay. On the capex side, in the last 5 years, we have done around more than 3,000 crore of capex. If I'm right or wrong, I'm just getting the rough data. So I think more than 3,000 crore of capex. So this year also we are doing 600 to 700 crore of capex, right?
Mm-hmm.
So basically, you are building up the plant and machineries or what? Because the free cash flow is not there. I'm not seeing the free cash flow for the last 5-7 years. So we are. Is that correct? We are not utilizing assets or what happening here? Just giving more idea of yours.
Sure,
So,
Karan.
there is a cash crunch in our financials of FY21-22. There is an issue of cash collection here, this CFO side. Yeah. So your comment on that.
Sure, Karan. So, first of all, I don't know about 3,000 crore, that this number is right or... I think that's number one. Number two, we are in a business for more than 6 decades, and I'm sure that even without growth, there will be some sustaining and replacement effects, which roughly annually just around 200 to 250 to 300 crores based on year to year, right? So if you take 5 years, 1,000 odd crores will anyway go into replacement capex or the what we call marginal growth what we have in businesses. And number two, 5 years back, our top line was 6,000 crores. Today, if you see the run rate of 3,000 crores, we are already at 12,000 crores. So 2x of the revenue. Obviously, I am sure you appreciate that in the industry where we operate, the asset turn ratio is roughly 2. So if I have gone from 6,000 to 12,000 crore of revenue, it would have needed at least 3,000 to 4,000 crore of capex. You will not be able to increase the size of the balance sheet without investment. So you have increased the size of the business by investing. So, and we always ask investors as to what do they want. Do they want money as dividend, or do they want money to be reinvested where we can get 20% pre-tax ROCE? And always the answer has been that the second one. So we've been working on that. So how to consistently outperform, how to grow the business, how to increase the size of the business, so that eventually at the end of the day we create value. So it's all system versus taking a call on whether you want to preserve cash and dividend it out. So we have got a very strong capital allocation policy, and within that policy we reinvest money only when there is a detailed project report which can give the visibility of those kind of returns, and that only we invest. So I think that is the broad structure. So what normally we also do internally, we look at free cash flow before project capex. Because project is something which is growing your business and sort of giving scale of operations, increasing size of business, creating new verticals, creating new plants, new businesses, etc. So if you see from that perspective, the business has consistently been generating free cash, and that's why if you see the debt levels are same over last few years. Yes, one would say that we have done a QIP, but that was more for equity to equity investment, which is for acquisition. Otherwise, all the capex has been primarily through internal accruals. So I think that's the way you want to see. You want to see is that free cash flow negative, or you want to see that free cash flow generated, invested, reinvested in the business and increasing the size of the business. It's the way you want to see glass half empty versus glass half full.
Yeah, so I just wanted to see the debt level decreasing by increasing your free cash flow. So anyway, that's a good thing if you are investing in your asset and also stable at the around, as per my calculation, around 3 to 4. The second last question is.
Sorry, I didn't hear it. You said asset turn is 4.
Yes, average.
Which business?
Not business wise, overall.
Anyway, our average asset turn is 1.9.
Okay. Okay. Anyway, my last question is related to consolidation of our auto ancillary businesses. So in the overall industry, do you see in the auto ancillary industry, you are the big player now, very big player, after Motherson Sumi. So you are seeing some kind of consolidation of the small players who are working in a niche kind of products like alloy wheels, steel wheels, lighting businesses. So you are planning acquisition kind of thing?
Sorry, Karan. For anything inorganic, there are, appreciate various things which the companies work on, and unless there is anything fructifies, we normally don't communicate.
Okay. Thank you.
Thank you. Before we proceed to the next question, a reminder to the participants to please limit your question to 2 per participants only. The next question is from the line of Rohit Chawla from New Vernon Capital. Please go ahead.
Yeah, my question is, firstly, thanks for the opportunity. Our castings revenues have gone up by 15% on a QOQ basis versus our overall revenue of 7% QOQ. Still, our margins have been slightly on the lower side. So, yes, our margin trajectory would remain at similar levels, but typically our casting and alloy wheel piece is a high margin piece. So, shouldn't we expect any increase in margins from here as well?
So, Rohit, you are right that directionally we do expect the casting business to be a better margin business. But first is you'll appreciate that for a two-wheeler business, it's a low margin business than normal four-wheeler business. It is now recently getting into stabilization phase. Margins are not in line with the passenger car business. So there are multiple things due to which, and also I think we said in the last call also that some of the new business which has been added were at very significantly lower prices. Now we are pressure getting eased because as the capacities of competition, everything gets full. Now we are seeing that the new business which is now we are getting at maybe marginally better price. So in fact, that you will see only 2 years down the line. In short term, there is some pain in terms of the margins in this segment because of the new business which was added at very, very high prices. And this is something which we are already, I think, guided the markets also. I think we have been saying for last 3 years.
Okay. Got it. So you mentioned that we are operating at 100% utilization. So we are expecting how much commercialization in this year from the expanded capacity?
So the super business, the expansion we are expecting to get completed by end of this year, calendar year. So then gradually we go into the commissioning phase. So you might not see any significant revenues flowing into this year. Whatever it is might be in the Q4. And the alloy wheel business, the expansion at Bawal is yet to start because of the land related challenges. We have not yet have land in our position.
Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you. I would like to thank everyone for joining the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy, and thank you once again for joining with us.
Thank you. On behalf of Uno Minda Limited, we conclude today's conference. Thank you for joining us. You may now disconnect your lines.